Good morning. You're watching The Market right here on ET Now with me, Aisha Faridi, Avan Dabash, Ate Sharma in the studios. And what a market this is turning out to be. Clearly pushing back all the turmoil that's happening within Middle East between Hamas as well as Israel, that behind us. And safe to say that this is not just the momentum for our markets. Yesterday, at least, the price action was pretty much similar across the world markets as well. So yes, we were not in the rally alone. Having said that, from the sub 19,500 levels day before, we managed to recoup all of those losses and closed in above the 19,700 print. So the Nifty has managed to move above its 50 DMA, led of course by private banking names, real estate names, and of course Infosys as well. So from that range at the lower end of 19,450, Ajay, we've made it all the way back to 19,700 a print.
Good morning, Aisha. Good morning, Avan. Well, I was very surprised the way we shrugged off all the... in fact, the helping hand actually came from overseas market. Also, if you look at last Wednesday, was the peak of pessimism. At that time, of course, the flare-up in Middle East hadn't happened. But that low was 19,350. So from there, if you see, we have actually rallied, almost 300 points plus on the Nifty in the matter of 4 or 5 sessions. In the midst of what is happening in the Middle East, I would say the positivity coming from the US market, easing crude. In fact, barring one day where there was a 5-6% kind of flare-up in crude, this entire Middle East fight and the crisis did not impact crude. There was no follow-up buying. That was a very big breather. Not to forget that we are sourcing our crude at way lower prices than the global average. But US yields easing for 3 consecutive days, dollar index also kind of peaking out, I think was a bigger cushion. And then, of course, there's so much of cash on the side. You talk to big HNIs across the country, mutual funds cash levels are elevated. I mean, I see little point even in looking at the FIS sell figure now, because for last 2 days, yes, they've been selling, but DIs are buying double the amount what is being sold off. So that actually helped very nicely. And today as well, we are almost knocking at 19,800.
Yeah, absolutely. And that's the point, Ajay, that 15 consecutive days of FII selling and our markets are doing what they're doing, completely recouped all of Wednesday's losses and holding out pretty strong. And I think that's the remarkable factor, right? That the markets are doing it solo on the basis of the DII inflows.
Well, it's called the third front now, the third front of the market, which cushions market from all the volatility, global volatility. Last 15, 17 years, all of us have got so accustomed to talking about FII flows because they were determining the direction in the near term. But look at how little, or I would say, the role they actually played in the last few years when the third front is coming back. So I wouldn't be surprised if the SIP number this month too knocks at 17,200 crores short of 16,800 was the last number. We are looking at very strong inflows. There's so much of fear of missing out. Yesterday, if you look at the Nifty Bank Nifty, you wouldn't see a single point in the session where there was a 40-50 point cut. There was a one-way kind of a rally which was coming in, clearly appearing that local money is supporting flows. But we'll talk about all of that. There is so much happening on individual stock front. What are you guys watching out for apart from this?
Yeah, there absolutely is, Ajay, and I think TCS is going to be the stock of the day. But before I get to that, I also want to address you talking about crude oil prices, and Aisha was also alluding to the fact that it's not just been our markets, the rest of the globe as well has been holding out quite decently. And just to put that into perspective, you did have Wall Street as well, which wrapped up last evening in the green quite comfortably as well. And this is after the kind of dovish commentary as well that we saw by the US Fed. And there was a bit of a decline as well in the US Treasury yields and some sort of an indication that the rate hikes are coming to an end. So you did have the S&P 500 gaining about 0.5%. That's the Nasdaq in the green, the Dow Jones as well. And across the board, you also had the European markets, which closed sharply higher. So you did have the DAX, for instance, gaining close to 2%. So clearly, you've got the rest of the global markets as well comfortably in the green. The Asian markets are piggybacking on that positive sentiment. So this morning, we're going in with fairly positive cues. You've got the Treasury yields easing, and the most of the part, you've got the Asian markets that are holding out in the green. For now, the indicative price on the GIFT Nifty is indicating that it could be a mildly positive start. So that's what the indication is coming in. But interesting as well, getting in some strategy notes from top brokerages, and CLSA's India strategy talks about how there are going to be a lot of positives. They're alluding to the fact that there will be a rebounding in the credit impulse, improving external dynamics as well as robust GDP growth. They have flagged off the fact that there could be lack of flexibility in the Reserve Bank's policy as well as expensive valuations, which could stem as some risks. And when it comes to their top picks, going bullish on the large caps like HDFC Bank, Reliance Industries, SBI, L&T, ONGC as well as Bajaj Finance. Those are some of the top picks from CLSA's basket. But other than that, Aisha, as I was saying, I think TCS is definitely going to be the stock of the day.
Yeah, absolutely. And especially with that impending buyback, Ajay, one's wondering, the stock has already managed to recoup all the way to its 52-week highs. That said, yesterday it did abate a little bit, but it is going to be a muted growth, that we already know. But what is the market pricing in? I think that's the question on everyone's mind. Is the worst behind us?
Aisha, you know, there are two opinions on that on the street. One says that usually we've seen whenever there's a kind of softish quarter ahead, companies come out and pad it up with a nice big corporate action. Not that TCS does have, I mean, they don't have to impress the street. They always call a spade, but that is one part. The other part is that, the peak of pessimism in IT sector was made 2 quarters back. From there, that level, every IT counter, be it large cap or mid cap, have rallied almost 15-20%. So whatever comes out this result, over and above the buyback clearly is supportive of the stock because ROEs improve. They have surplus cash. But whatever comes out in the result commentary about the outlook is what determine the stock movement from here on. And my view personally is, looking at the street, what the notes that you're coming, speaking to some people, that the negativity this time cannot match 2 quarters back. So however soft the number is, the people will just take it in the stride. IT is where eagerness to buy is. If you look, the price action itself in the last 1 month is telling you that. But of course, sector leader, so everybody would watch out for the extent of caution, extent of positivity. Is the visibility on deals have improved or not? So we will be watching out for that commentary. I'm sure Anisha would be quizzing the management on all of that.
Absolutely. In fact, we'll get Somit as well shortly to tell us, more importantly, all about the buyback and what's in it for shareholders, what could be the possible acceptance ratio, and of course, retail participation as well. But let's talk about what the global setup is looking like. And before that, the GIFT Nifty is indicating a little bit of a momentum this morning. About 4650 odd points is what the implied open is indicating. So suffice to say, we are only inching closer to that 19,800 print on the Nifty futures, at least to start off the trade with. But Harsh is here to tell us what the global mood is like. Harsh?
Well, yes, we've got a ton of comments coming in from members of the Federal Reserve. Let's, go straight to Mary Daly. She's talking about 5% not being the new neutral with regard to the federal funds rate. She says that there's no evidence that this will be the new neutral. Currently, the 5% rate is, of course, to fight back on high inflation, and she's expecting the neutral rate to be around the 2.5 to 3% mark. Of course, she also says that the current or the recent bond yield spike that we've seen from that 4.3 to around the 4.65, 4.7% mark on the US 10-year will aid to tighter financial conditions and will direct, or will give direction and will aid the rate hikes that have already come through. Quickly moving on, we also had Neil Kashkari, who spoke about the rising bond yields actually being a bit perplexing. So his commentary is slightly different. He believes that there's certainly a possibility that the longer-term yields have risen largely due to the expectation that rates will go up further, and therefore he believes that the Federal Reserve's duty and responsibility is to aid the market and give the market what it wants, and therefore increase rates further. So that's his viewpoint. We also had the Atlanta Federal Reserve President Raphael Bostic, who also spoke about bringing inflation back to 2%. He believes that the policy rate is sufficiently restrictive. So we had a plethora of comments coming through, different viewpoints of the different members of the Fed.
All right. So that is a gist of the global commentary. which we have gathered overnight. In fact, that has also got a very large role to play why the global US, in particular, US yields have softened for 2 consecutive days. But we'll also get in our technical panelists on the show now. Kunal and Nooresh both are here. But meanwhile, just wanted to highlight an important part of the CLSA report, which Avan was also mentioning. This is a report on India by CLSA's global team. This is not the India team, the regular India strategy report which we are talking about. And one of the things which stands out over here is that they have gone ahead and increased, the global team recommends India exposure to be increased 20% above benchmark. So that is the extent of positivity incrementally which the global team of CLSA is witnessing. And you know, if you follow global influential brokerages very closely, you would clearly know that last 1 month, a lot of caution type of notes have started coming in, calling it valuation is a challenge, this, that. But still, CLSA is being forced in a way. They're saying that the credit impulse is very strong. And we are entering a period in India, right from Ganesh Chaturthi in Maharashtra all the way to Holi in March. You would see some state have some kind of a festival or the other. This is the period where credit impulse actually spikes here in India. So that, watch out for that one. And the names which they call it high conviction, actually many of them have not performed a whole lot. SBI is still struggling at 585. HDFC Bank is still struggling. RIL is still struggling. So they are actually leaning towards the names which have not performed a whole lot but likely to in the next few months. So that is something I thought of just bringing to the table. But let's talk technicals now. Nifty, Bank Nifty, both were in a tear yesterday. Kunal, Nooresh are here. Kunal, let's start with your view. The way we kind of darted yesterday. If I'm holding my long positions, what should be the right strategy? Or if I missed out latching onto this, how should I approach the market now?
Good morning, Ajay. So it's a good time to now start building up long positions. So we were holding long positions on the indices a couple of days back when, in fact, last week when the index had hit that 90,300 mark. That was a point where the index formed a lot of multiple patterns, bullish hammer pattern, bullish island candlestick pattern for the index, and a gap up which happened post that. Now, even the last 2 days back of the volatility of the index, we did not break below the 90,300 mark. And yesterday we managed to close above the 50-day moving average for the Nifty. So a lot of positive technical confirmations which are occurring for the indices. This could be termed as a good sign for the index over the near term. So maintain the long positions, build on to longs for the indices, as well as if you manage to maybe cross even 45,000 approximately on the Bank Nifty or come closer to that level, that could again be termed as a strong breakout for the banking index.
Okay, and well, the market's true star yesterday was the Nifty Realty Index, right? 15-year high on that particular index, held out just so smartly. And of course, the composites as well are making fresh highs on a daily basis. Nooresh, hi, morning. You think the momentum in realty is here to stay?
So yes, for the short to medium term, yes, maybe for a day or two, if we get a pause, that would be a time to buy into it. So a lot of real estate stocks have broken out. So it's no more just the DLF, which was leading the path. We've seen a breakout in the Prestige, a Brigade Enterprises, even a Kolte Patil, a Puravankara. So this is a sectoral churn which has happened yesterday. Rotation is coming into play in real estate. Given the extent of the move yesterday, there could be some bit of a dip over the next couple of sessions, and that is the point of time you want to buy into them. So overall, any dips, one can go choosing stocks. There are multiple choices in this sector, from small cap, mid cap to large cap. And we've seen yesterday all the names do well. So like realty as a sector, waiting out for dips for the next couple of sessions.
Okay, fair enough. We'll get in your stock picks too in a bit, but let's find out what's on Kunal's radar first up. Kunal?
So 2 buy calls, the first one focusing on large cap names. So after quite some time, ICICI Bank has managed to show signs of bullish swing breakout. It's managed to confirm a 3-day swing breakout on the charts. So expecting a follow through up move for ICICI Bank, targets of 975. Stop loss could be kept at 930. And the second would be about NMDC. We discussed the stock yesterday as well. Classical breakout for the stock. Already on the quarterly charts, it's confirming a triangular pattern breakout, but even on the daily charts, it's about to confirm a consolidation breakout after almost 3 or 4 weeks of range bound action for NMDC. So that's also a buy, 160 as a target, and revising the stop loss to 144.
Okay, Nooresh, let's get stock strategies from you too.
So in terms of stock, looking out for First is a buy on NMDC. The stock gave a breakout yesterday, a short-term flag breakout, range breakout. And the whole mining space has been clearly leading up. NMDC started off, we've seen the other names also do well. After consolidating for the last few weeks, a fresh breakout here. Relative strength has been good with the other indices also. Expecting this to move towards 170, stop loss at 145. Second is a buy on Bandhan Bank, which is on verge of a longer term trend change. The range has contracted for the last couple of weeks in a very tight range of 245 to 255. Once it sustains 255 would be a good breakout. Multiple attempts done around that area in the last few sessions, expecting this to break out going forward. So preempting the breakout here, stop loss at 245, target price of 275.
All right, stay with us, Nooresh, Kunal. We'll come back to you for more stocks. But before that, let's also go to our research test to find out some of the stocks which are in news and you should be aware of. Starting with Bank of Baroda. Somit is here. Somit, what's brewing there?
Well, if you see, the RBI has put an embargo on Bank of Baroda for onboarding new customers from that digital app that is Bank of Baroda World. Now, Citi is saying that this will moderate the pace of new customer acquisition and to an extent for the company, because nearly 43% of the fixed deposit and recurring deposits and nearly 44% of the PPFs are sourced from this app. 89% of the personal loans. Now, personal loans as a percentage of total loan books is very small, just 2-3%, but it has been growing at a very strong rate at around 83% on a YOY basis, and nearly 89% of this is sourced from their app, and this could come to a halt for Bank of Baroda going forward. Now, what is the most important thing here is to see how effectively Bank of Baroda deals with RBI and how soon they can lift off this ban. Now, in past we have seen that on an average it takes nearly 15 months for a bank to lift this ban that has been put on by RBI. So that could be one of the key overhangs now going ahead for Bank of Baroda. Now, as per Macquarie, this will hamper both asset and liability growth in the near term for Bank of Baroda, because nearly 98% of the savings account and 91% of the accounts were sourced digitally in the first quarter of FY24. So this is one of a key overhang that will continue on Bank of Baroda, and we'll have to watch out how this pans out and what is the commentary coming in from the company in the second quarter earnings call related to this embargo.
All right, and that's going to be interesting to clearly watch out for, basis those brokerage notes saying that as of now the earnings impact will be immaterial and asset and liability growth is likely to be hit. Let's move right on then and talk autos, Sumit. Discuss the DAM Capital view on TVS Motor, because they're giving the stock a thumbs up.
Well, yesterday it was Escorts where they came out with a note with a significant potential upside, and today it's TVS Motors. Now, the target price of 3,051 rupees. Now, this is the highest target price on the street, and the current market price suggests a return potential of close to 100% on the stock. Now, what the brokerage is saying is that the structural export story has started to gain traction for TVS Motor. Now, they're saying that recent channel check indicates improving retail demand situation in the African countries and acceptance of TVS as a brand in these countries. Now, they're expecting a rebound in exports in the second half of financial year FY24, and they're also saying that the domestic two-wheeler market will also see a gradual growth going forward, given the fact that there is festive season upcoming. Now, they're expecting a healthy double-digit volume growth for TVS Motor, which could be higher of around 30-odd%, and they're also expecting margins to expand going forward. Now, in the view of strong product basket, improved brand equity, healthy export potential, ramp up in their EV space, and increasing margin territory, all these factors would lead to a re-rating when it comes to TVS Motor, and hence the target price on the street is the highest and suggests a return potential of nearly 100% for TVS Motor.
Well, given by how Escorts jumped up in trade yesterday, let's expect some more fireworks for TVS, which in any case has been one of the better performing two-wheeler names. But TCS, that's going to be the big one, right? And Sumit, given the market's muted expectations, muted performance from the stock yesterday, I think the bigger trigger is going to be the buyback. What can one expect there?
Well, buyback, yes, expectedly is one of the biggest trigger for TVS, given the fact that it has been on expectations for the last couple of quarters, but the company did not announce, and this quarter they will be considering buyback. But the point that we are trying to make here is that even for retail investors, if you see, the buyback would not result into much gains going forward, and this is purely on the back of the fact that in the last buyback that the company did, the acceptance ratio for retail investors was as low as 24% because of more participation coming in. Now, in the first three buybacks that TCS did, the retail retail acceptance ratio was 100%. Hence, the premium at which they were doing the buyback would this premium would be the total gains for retail investors. But given the fact that acceptance ratio has now come down to 24%, if similar acceptance ratio continues in this buyback also, then the actual gains would be very much limited. In the past, we have seen that the company has done a buyback at a premium of around 80-odd%. So we are assuming that even if the company does a buyback at a premium of 20-odd%, if the retail acceptance ratio is as low as 25%, then the actual gain for any retail investor would be as low as 5% over a period of 2 to 3 months. So even the buyback play for retail investor when it comes to TCS would not result into much gains going forward, given the fact that retail acceptance ratio has come down.
All right, that's critical. The retail acceptance ratio coming down, that puts the buyback as well into perspective. Thanks very much, Someth, for joining in and highlighting all of those stocks to watch out for. Tell you what, we'll slip into a very short break, but don't go anywhere. We have our fundamental guest joining in. We'll also get in Sanjeev Bhasin and there are a lot of stock ideas.
Markets is Sanjeev Bhasin also joining us now. Sanjeev, good morning. I remember 2 days back you did, take a call on the market that this war fears, all of that will be very temporary, and market indeed has come back roaring. What are the indicators which actually saw, which made you so confident of a pullback shortly?
Yeah, good morning, Ajay. Good morning to you and everyone who's watching. Watch ET now every morning and you will get over the fear bugs. The last 3 days were the opportunity, and the opportunity doesn't come knocking. It's not today, Ajay. I've been in the market 34 years and I've seen a lot of these events where geopolitical risk comes. The event is a sudden drawdown, which is a knee-jerk reaction. You take any of the big events from 9/11 till now, markets do capitalize, but then they come back very strongly. Only for the point that bond yields in the US will become a source of safety, and as yields fall, equities become very, very attractive. Now, I know it's not easy to buy when there is, unfortunately, people dying all over, but that is where the opportunity lies. Secondly, Ajay, foreigners have been net very underweight India and looking for deeper corrections. And if I read the, news today, CLSS says we cannot miss out on this opportunity of credit expansion, growth, and consumer spending along with capex. So they've turned overweight 20% more than MSCI weight, which makes my conviction even more that we are going to 20,000 faster than we thought in the month of October. Maybe not before the end, earlier than that in the second half, definitely.
Right. So, Sanjeev, what's the best way to actually enjoy this move in the market? Any stocks that you'd like to recommend?
Yeah, so, morning, Aisha, yesterday I had told you Reliance. I continue to say be overweight. Reliance is one of the large caps which has underperformed but has enough legroom now on the upside. Like I said yesterday, you're valuing the retail business at about 9.5 lakh crore. Then the rest of the business cannot be at 6 lakh crore. So I think that Geo, OTC, New Energy, if you just took some parts, I would say valuations lie closer to 18.5 to 20 lakh crore. And I think that there is enough room of an upside for a 2650 target there. Today, I would recommend some of the fertilizer stocks which showed a lot of momentum. Now, this is also one of the calls which is that you have to try and play some of the momentum plays. I like very much Chambal and GNFC both. Secondly, if you read the papers, there is a 30% uplift in the, for farmers, which are relief which come, which will spurt these fertilizer stocks. So Chambal and GNFC both good for another 10%. Chambal anyway has also shipping as a business, which is doing extremely well. And at 280, considering the dividend yield, I think this can easily give you a shot at 310. GNFC itself is also a very good play on the fertilizer and the specialty chemical that they make. So 700 rupees on that is not a, is something which I would be comfortable. My last pick would be, this is a positional play on SRF. I think SRF is underrated as a company. It has enough things going. It is the 10th largest player, one of the top 10 players in BOPP, that is the plastic side of the filming. It is one of the largest players in nylon cord industry. This is aside from the specialty chemicals that they do. And in fluorochemicals, if you are going to see relief for the farmer and 30% more budget on fertilizer, then Bayer Crop Science is one of the biggest player, and their sole selling supplier of fluorochemicals is SRF. So SRF is a positional play at this 2200 and 2230. I think 2700, 2750 can come in the next 2 months, maybe closer to Diwali, if I'm correct, and this package plays out. So these are 3-4 very good ideas which can make you money. And at a time when you are looking for good stocks or ideas, then these should fit the bill perfectly.
Sanjeev, just wanted to scratch that point of the fertilizers, domestic kind of agrochem stocks a little more. Bloomberg has just put out a note saying that government may actually weigh raising annual farmer cash support via DBT by 30%. So 30% more money in the hand of the farmer. I think large part would actually be utilized for farm, upgradation or farm equipment or maybe fertilizers and all of that, because their sole livelihood is actually coming from the farm. They tend to spend there. Is that the trigger? What exactly are the triggers you're looking for that for the call on fertilizer stocks?
Correct. So Ajay, it will have an effect on the whole pipeline. Like I said, Chambal, GNFC, you can see UPL getting re-rated. You can see rallies which have not done much because of less demand in agrochemical. And once that spills through, you'll see consumer spending. You will buy more motorcycles. You will want to buy better cars, and the spill through effect. But the first play would be to ensure your crop and other things which will get better. You will get better margins and yields over there. And as you know, the sowing season is now, so people will look for this opportunity. I think it's a very big objective that the government is passing through again. You can say that elections are an overhang or a key, but I think hands in the hand of the farmer means rural incomes are going to be up. You can add that with a Bajaj Auto and play on that side, or you can see some of the TVS Motors of the world which are going to be beneficiating both from rural income and the added EV plays. And like I said, Chambal, GNFC, SRF fit the bill perfectly.
But Sanjeev, the story clearly seems to be in the real estate index, right? Fresh highs day in and day out, all the stocks holding up. You think there's money still to be made in any of the realty names? Would you have any picks there?
So Aisha, I stay very close to DLF Magnolia. I don't own Magnolia, but I'm very close to that, about 7 minutes from my house. And yesterday, I believe there was a deal for 100 crore on a 10,000 square feet apartment or a flat or a house. You can imagine that was about 60 crore about 8 months back. So the appreciation in price is telling me that DLF is hitting no new highs, not for any other reason, but the sole ownership of land banks and the value creation is huge. And gold and equity markets doing well. Fixed assets like real estate are hitting 15-year highs. As a disclosure, both DLF and Godrej are in our portfolios, and we are sitting pretty. And I can tell you, Gurgaon has seen the fastest appreciation in prices in the last 2 years than in the last 20. So it tells me that some of these plays are going to be even more bigger. And as the wealth effect plays out, then these two are musts in your portfolio. Add some now, wait for some decline, but definitely real estate is in a very sweet spot.
The way the momentum is intact within realty, is that dip going to come anytime soon for us to buy?
Well, I doubt so. I think it's better that you start nibbling at higher levels. Now, maybe the only tweak which you can do is to reduce the quantity. But the way many of these stocks have risen up higher, I think it's exceptionally strong. And it's again an indication that these stocks, even though they are high beta in nature, they are not buckling under the the similar kind of a pressure. When we expect the indices to correct, we expect the high beta sectors and stocks to also go into a sharper correction, but that's not the case this time around for the real estate pack. Even if it's the likes of the mid cap end of the real estate pack, like maybe the likes of Sobha, Suntec Realty, etc., the formidable ones like DLF, Oberoi Realty, Godrej Properties, these stocks have not shown any major degree of volatility, especially in the last 6 to 8 months. That itself is a sign of behavioral change for these stocks. So, would be very bullish on the space. DLF, Anantraj are two names which I've been consistently advising and would recommend to buy even at current levels.
Nooresh, I want to come to you about a small cap lender, which is, I mean, a lot of quarterly updates are coming in. Ugro Capital came out with a update yesterday, last evening, shows a 76% kind of a jump. But this stock almost went to 320 and came back. How are the charts looking?
So a lot of the smaller NBFCs have done well over the last 6 months. Ugro Capital was 150 rupees back in March, April. Made a breakout move into new 52-week highs. Has started drifting from 320 levels towards 270. Now the last breakout for the stock was 240 to 250 levels. So I would expect 240, 250 to hold, and closer to 260, 270 one could actually be looking at as a buy on retest of the breakout. So technically the structure is strong and the sector overall looks promising because we've seen the trends continue. But given the volatility in the sector, would keep a stop loss below 250 and look at it as a bounce back trade from here.
Okay, fair enough. Meantime, wanted to get in your take then, Sanjeev, as to what the outlook is within the entire capital goods space. Are you sticking to just some of the large caps like an L&T, or would the net be widened further?
Yeah, good morning. So, Avan, I think CapEx is in the best space ever. Imagine L&T announcing a buyback when the stock is at a 3-year high, which tells you the confidence the management has. And for long, L&T has always been in high single digits. This time, the margins are looking to be maybe in the mid-teens, which is very, very sweet for L&T. So L&T and Thermax are two big plays which we have. If you look for a decline in ABB, then that would be a must-have in a portfolio. But a quasi play on that would be Bharat Forge. As a disclosure, we've had Bharat Forge in the under coverage from that 650, 700, and now closer to 1100, hitting all-time highs. We think it's in a very sweet spot, given that it has exposure on forging industry, capex expansion, and the defense side. So it's a quasi play on the defense, but on the capex. But Bharat Forge is a must-have in a portfolio.
Sanjeev, and though you are a teetotaler, you do track some of the premium liquor stocks very closely. The news is now, Economic Times this morning has put out that India may finally sign the FTA, the free trade agreement with UK by end of this month, which means in the next fortnight. Now, Diageo, which is listed in India, United Spirits, was seen as a possible beneficiary of that. You tracked that stock before. Do you like it at current levels? It's done pretty well in the last 6 months.
Yes, Ajay, that's the advantage of being a teetotaler. You are unbiased towards the tipple effect, and you are more balanced, even if the stocks are rising to new highs. So on a lighter note, yes, Diageo has been, or United Spirits has been in my personal portfolio as a disclosure since long. And I think the rising income, millennial spending, and the World Cup is all going to spur social drinking to a new high. The other stock would be Radico Khaitan, which has been a true outlier. And if you can spot, but stay with the market leader, I think Diageo is headed for newer highs.
Fair enough, looking at that entire space very closely. But in the meantime, I'm just curious, Sanjeev, to understand your take on how things have really transpired with something like a Z Entertainment. What's your outlook after the roller coaster ride that the company has really been on? Do you believe it's a good opportunity, or is it a complete avoid?
No, it's an excellent opportunity. Avan, you will have to, digest some of the news which goes on the NCLT and the court and the IDBI hearings. All that is priced in. You cannot have but Sony take a big stake of 57.5% and the company becoming relatively debt-free. I think the muck created by the Chandras has come to a head. And now you will actually see real value for entertainment. Look at Sun TV hitting new highs. Look at the viewership which Disney is garnering. And with cricket and the World Cup and the exclusive rights Sony has, I think it's a very, very good play. So have a little bit more patience if you have. We actually spotted it at 185, and Ajay knows at that time when there was too much of uncertainty, that gave you the real opportunity. Now, I am not of the view that entertainment is a 6 day or a 6 week or a 6 month. This is a very, very long story, and the way the Z brand is and the establishment they have across the board on OTT, I think this stock can be a huge, outperformer in the next 2-3 years. So wait for this little bit of impasse to pass over, and you will be actually sitting on a huge wealth creator once Sony gets the clear title.
In fact, I do very clearly remember, Sanjeev, 185, 187 is when your brave call on Z was for a delivery based kind of a play. But so that was a valuation mismatch, and you were pretty convinced that this matter will move in the favor and the merger will go forward. But what has also happened in the last 1 week or so is that the print and the digital, the DB Corps, the Jagran Prakashan, the ENIL radio saw a very big ad rate hike yesterday, have also come back. Very under-owned kind of a space. DB Corp has done well, Jagran, etc. Do you track that space? Because there's a election ad spend angle to it as well.
So the market caps are fairly low, and we are getting into bigger ideas right now. And Z has a fairly large. But I'll give you a small brief. Z has a market cap of closer to 20,000 crore at this. Market cap of Walt Disney is $2 billion. So I mean, entertainment in India is available for a song. And look at the viewership, look at the increase, and the growth in everyone's budget to media is unavoidable. You will do anything, whether you're sad or happy, you have to watch media. So I think Z is a no-brainer. The only thing which is overhanging is this constant to and fro of few cases. They've settled most of them, and I think that this is going to do extremely well. You can add a Sun TV, the type of breadth and the length they have broken. It still trades at a very reasonable multiple, I think. And in the South, we think that their market share being humongous, they can head higher on the OTT platform. On the print media, I have not tracked some of them because the market caps are fairly low. But that's telling you that ad revenues are going to be, or ad revenue incomes are going to be very strong, because you're at the cusp of the festive season, the World Cup. All that means that players like Z and Sun will be laughing their way to the bank, I think.
All right. Thanks very much, Sanjeev. Good to have you on board on that positive note and share with us your stock ideas. Well, let's move on. And as TCS is all set to kickstart the earnings season, which are some of the companies that could see stellar profit growth this quarter? Which are the ones that could see a maximum sequential decline in their profits? We've assessed all of those details and now got Somit to join in with all the details. Somit?
Well, we have collated this data from the Bloomberg terminal, and the only filter that we had used was that minimum analyst tracking individual company has to be 10. So firstly, it's Greenply, which is expected to see the highest sequential growth in its net profit, and that is because in the Q1, the numbers were impacted owing to a maintenance shutdown, higher raw material prices, the Gabon impact, and because of lower demand. UPL is also expected to see a good growth from 166 crore to 546 crore is the net profit growth that is expected on the back of improving prices and demand supply scenario. When it comes to Healthcare Global, it's on the back of better revenue per bed, better occupancy, and end of one-off consultancy charges that the company had reported in the first quarter. When it comes to Prince Pipe, it's on the back of higher volumes and prices, which would aid the profitability. For Shobha, it is the strong bookings and highest ever pre-sales that the company has seen in the second quarter of FY24. And for KC International, it's moderating raw material prices and higher sales, which will aid the numbers in the second quarter. Now coming on to the companies that are expected to report the highest sequential decline when it comes to the second quarter profitability. First two companies are Amber and Indigo, which are expected to report a loss from a profit that they reported in the first quarter. Now for Amber, it is because Q2 is seasonally weak quarter, and for Indigo, it is given the fact that in the second quarter, the air traffic was weak, crude prices were on the higher side, while the ticket prices were on the lower side. When it comes to Sudarshan Chemicals, it's the weak demand from paint, plastic and packaging material, which would weigh on the volumes. For cement companies like Nuvoco Vistas and Shree Cement, is the lower demand, lower prices and higher raw material prices, which would aid the company's profitability. And for oil marketing companies like BPCL, HPCL and Indian Oil Corporation, is the weak sequential gross refining margin, and because of higher crude prices, the marketing margins were also on the lower side, and both these factors would weigh on the profitability for all the three oil marketing companies, that is HPCL, BPCL and Indian Oil Corporation in the second quarter.
All right, so we'll keep an eye on all those factors. Thanks for that, Soumit. Himang Jani is also joining us. And now, Himang, good morning. Were you able to take benefit from the one-day crash which we saw in mid-caps, small-caps? Did you nibble in, or were you waiting and it just missed the bus, or what exactly happened?
Yeah, good morning, Ajay. I think we are in a market where you see a very short-term volatility basis, either the global news flow or some normal domestic market development. But typically, whenever you've seen any corrections, cuts across whether it's mid-cap or the larger cap markets, buy and dip has been a decent strategy to go with. So I think, though this entire mind space has been occupied by the recent developments in Middle East, between Palestine and Israel, what is really important to know is that the earnings season is underway, and our sense is that the numbers are going to be very strong. US also, you're seeing positive triggers in terms of bond yields and possible stability in the markets. So overall, things are looking quite positive at this point of time.
What about your outlook then, Hemang, morning on the entire, theme of the World Cup? How are you looking at individual sectors, companies, hospitality, food delivery, airlines, etc., really benefiting from a stock market perspective and really cashing in on this boom?
The next 2 quarters will be driven by big events like ICC World Cup and the festive season, and these will serve as a big positive catalyst, at least in the short term, for the consumer demand. So the whole host of sectors, QSR, hotels, aviation, would see a decent amount of traction on the back of that. Of course, the crude price will be a key monitorable because of the events unfolding. But we've seen how the markets are able to digest that when it's a short-term spike. So the specific names that we like are Titan, Indian Hotels, Zomato, some of the other consumption names like DMart. So we continue to have a positive bias on these names.
Himang, CLSA's global team have put out a very interesting note this morning, calling it Incredible India, and on the one side, admitting that high valuations do become a challenge, but cannot help but back few names out there, because credit growth impetus is likely to come from here on. And we are entering that phase of the year where Indian economy actually witnesses a lot of buying, festive season, harvest season, all of that. If I were to ask you to bet on any of the SME lender, personal finance kind of a lender, or housing finance company, which one would that be? Because that's a direct play on heightened spending.
Yeah, so I think NBFCs have been outperforming for the past about, let's say, 3 or 4 months, ever since we had that indication of a rate pause. So within the NBFCs, you have some companies which are essentially housing finance companies. So LIC Housing is something that we have been liking, and if we have any incremental announcements on housing related aspects, surely it will have a big impact there. Apart from that, Mahindra Finance in the large cap, the Bajaj Finance and Bajaj Finserv have been outperforming big time despite high valuations, and they continue to report very strong business updates. So I think if you want to play a little safe and where the companies have a slightly better valuation comfort, I think Mahindra Finance and LIC Housing, these are the two names that we would go with.
Right, M&M Finance, LIC Housing, that's what Hemang is veering towards as some of his recommendations within that space. But just taking a look at the kind of price action that we've witnessed on individual counters within the last 1 month or so, and it's been interesting. The likes of an IOB, for instance, have scaled up nearly 40%. Keynes Tech as well, Nikunj has been flagging this one off, has had a pretty terrific run of about 30% plus, and you've got something like a Gujarat Ambuja Exports as well, which has scaled up about 28% in this week. Curious to get in your take, Kunal, on the charts. Any of these names are looking good for a further up move, or they've run their course?
I think Keynes is looking quite attractive. So, Keynes, Sirma SGS, many of these stocks, they have of course done exceptionally well. But then, it's a very similar kind of a trend that, when these stocks go into a strong uptrend without any major kind of a drop or a retracement or a correction for these stocks. And when you see consistent buying, which means that this is now likely to get into a multi-year uptrend. So, something like for example, we saw in the defense stocks in a couple of years back when the defense stocks started to move up higher. We expected that the stock moved up into an overbought territory in a shorter span of time, but then overbought territory in the short span of time actually results into more longer term uptrend for these stocks if they sustain. So I would believe that the likes of Keynes, Sirma SGS, they're actually showing similar kind of a trend for themselves. It's always better to try and buy these stocks at a point when you are confident that the longer term outlook looks attractive, and then start to nibble into these names in case if there is any mild kind of a correction, because ideally in this kind of a scenario, at least looking at the very recent charts, the history for these stocks, it's very difficult to anticipate that these stocks may go into a very sharp phase of correction, something which we've not seen at least over the last 6 odd months for these names.
Okay. Hemang, just stay with us. In fact, all of you just stay with us. We'll just hop on to our research test once again. Sharad is joining us with some data on insurance stocks. Let's check out that data and we'll discuss specific stocks from that universe as well. Sharad, tell us.
Well, yes, sir. So we are focusing what the insurance companies have bought and sold in terms of fresh entries and exits for the month of September. Do remember, insurance companies do have allocations as equity investments as well. Now, looking at ICICI Pru, we have new entries coming in Restaurant Brands Asia, RBL Bank, IDFC, while exit coming from the names such as Tata Power, Supreme Industries and Apollo Tyres. Apart from ICICI Pru, SBI Life Insurance is in focus, and the new fresh entries coming in is Concord Biotech, which was recently listed, and also Tata Communications and TVS Supply Chain. In terms of exit, two names have come up, Imami and Vardhaman Textiles. Also after SBI Life, HDFC Life Insurance is in focus, and here Nykaa, Macrotech Developers and RR Cable are the fresh entries, while the exits, the names include Kansai Nerolac, Chalet Hotels and also 361 Wealth Management. Lastly, I'd like to point out Kotak Life. Over here, the action has come in, especially in the mid-cap space. Entries coming in fresh, PG Electroplast and Phenolix Cables, while the exit coming in for Astral Pipes, Gujarat Gas and lastly PNC Infratech.
All right, thanks very much. That's interesting to check in on some of the stocks that have been bought and sold by the insurance companies. Meantime, Hemang, how are you reading into the news? It was an ET Now news break actually with respect to Cipla that they're facing a hurdle in differences over the valuation, this time around. What exactly is it that you are, reading into, given that there has been that proposal to sell equity stake in the drug firm?
Any transaction of this scale will have its own challenges in terms of valuations, in terms of other regulatory issues, etc. I think the fact of the matter is that Cipla management has been looking out for a buyer for a substantial stake held by Dr. Hamid for a while. And it remains to be seen as to when and at what valuations it finally fructifies. However, in the meantime, the focus will clearly be on the kind of performance that the company reports. And we've seen last quarter, Dr. Reddy's, Cipla, even Sun Pharma reported a decent set of numbers. So this quarter, again, the expectations are that given the stability of price in the US, some of these companies would deliver reasonably good growth. So I think the view there is positive. Of course, it's always a bet between risk off and risk on. When the defensives are at play, some of these companies tend to really do well. But they cool off when BFSI and mid caps and small caps are in favor. So you have to strike a balance.
Hemang, did you catch this new piece of news this morning which says that the current management, it's on Religare Enterprises, the current management believes that the open offer which is been announced by the Burmans actually doesn't reflect the right value of the stock of the share, and they believe that the underlying value is much higher, and they are proposing an independent valuation. Do you track that stock, and or maybe after Burman open offer, any likelihood of re-rating ahead?
So, Ajay, I don't track the stock very closely, but my sense is that given the current positioning, the market cap of the company is about 7,700 crore, and the kind of positioning that they have, I think they are reporting a quarterly profit of almost about 140 odd crore. So clearly, if you see, somebody coming into the company and infuse funds, there is a scope for re-rating. Now, what valuation the is willing to give is a matter of their own judgment. So I think there is a inherent value. The current market cap does not surely reflect that, but I haven't really looked at the more details, so won't be able to comment.
There's a lot of emphasis as well on the entire logistics space, and I'm wondering, Hemang, if you're looking at any stocks within this entire listed arena that you can bet on for the long haul.
Absolutely. I think given the kind of traction that we are seeing in the domestic economy and some of the data points like airway bills and even the GST collection, etc., I think the logistics is going to play a key role more so because of the kind of traction we will see on the consumer demand. So I think Blue Dart and VRL Logistics, these are the two names that we've been liking, and they've done reasonably well. But I think given the incremental triggers in terms of the growth, I think people would want to really relook at these names. So we have a positive bias on these two names.
Look at some of the names from yesterday, which were the big buzzers. Coal India, which managed to hit a 5-year high for itself. There was a big move coming in on NMDC. There was Godrej Properties, of course, which held out very smartly. And then City Union Bank, which perked up all the way in excess of 7% in trade yesterday. Led, of course, by Escorts Kubota after that massive price target upgrade coming in from the House of Dam Capital. Now pegging the price on a 12-month basis, or target price rather, all the way in excess of that 5,000 rupee per share mark. But Hemang, just wanted to get in a sense on PSUs at large and ex-PSBs. They've had a fabulous time in the last 1 year or so. I mean, cases in point being NMDC, Coal India, and I can go on with the list of names. Are you comfortable buying or adding fresh positions to any of these names, even at these levels, after the run-up that has already transpired?
Within the PSUs, if you exclude the public sector banks, I think some of the commodity-based PSUs, be it NMDC, Coal India, SAIL to some extent, I think there is a lot of comfort in terms of valuations, and if you see revivals in the let's say metal sector per se on the back of what's really happening in China, the fresh amount that they really put in to revive the economy would surely have some rub-off on these companies. So I think Coal India, NMDC, these are the two names that we continue to like. And I think at these valuations, there is definitely a case of some sort of a re-rating. The quarterly numbers are going to be quite good. So one can really participate at this point of time.
Well, Bharti is also moving very quietly but steadily higher, almost now at 950. Is it ripe for 1,000 kind of a level also in the near term? Does it appear so?
Yeah, Ajay, I think the stock should head towards that 4-digit mark. And remember, it's a very, very low beta stock. So I've done the stat for Bharti Airtel some time back when the stock was around 600, 550, 600 mark. The beta for the stock is around 0.5 to 0.65 approximately in best of the market trends, or even in the phases when the market volatility shoots up higher. Now, even the last 2-3 months, if you look at the price charts for Bharti Airtel, at a point when the Nifty first made a high in the month of July, went into correction, then made another high of 20,000 plus in the month of September, and so far, we are still looking at Bharti Airtel in the last 3 months gaining from 750 levels to actually around 900, 950 odd mark. So that itself is an indication that the stock is moving into an own tangent, devoid of the overall market and of course not highly correlated with the index movements. I think that's the bigger hallmark feature for the stock price, which means that what this stock it would probably do is go into a consistent uptrend over the medium to long term charts. You can't expect, you generally don't expect a very fiery kind of a move from Bharti Airtel, looking at the way the historical trends have shaped up. But if you have a time frame of say 2 years, 3 years, and you're looking at a 15 to 20% kind of a steady return, I think the stock would probably tend to deliver that.
And Hemang, where does your preference lie within the entire FMCG space? What is it that you're penciling in when it comes to volume growth in the upcoming quarterly numbers?
Within the FMCG, we like DMart. We also like, to some extent, Dabur and Godrej Consumer Products. I think these are the names where we expect a reasonably good, growth in terms of volumes for this quarter. Also, the margin pressure also is easing out. So I think, one should really look out for these names from a short to medium term perspective.
Right. Okay, those are a couple of stocks which are in focus. Kunal, in fact, I want to take stock of some of these big movers from yesterday. Coal India, NMDC, any of these commodity PSUs you think make for a good long even now?
Well, I think both of them. So Coal India looks very attractive even at 300 plus levels, and this is the first time I think in the last 5 years that the stock has managed to break past about the psychological level. What I like about the charts for Coal India is the approach the stock has shown in the last 2-3 months from the August second half rally for Coal India. I think from 225 or 230 levels straight in a matter of just about few trading sessions, the stock went to as much as 280. And then from 280, the stock has gone through a gradual consolidation. So we call it as a rising consolidation, something which is very rare to find in a PSU stock, and that too of the cadre of Coal India. And post that, we've seen yesterday the stock being past about 300 levels, which is again a psychological breakout for the stock. So I think it's a very strong move, indicative that we are looking at a possible change of a bigger trend for Coal India. Even for NMDC, I think it's an excellent chart. The stock has done phenomenally well in the previous quarter, moved up from I think 110 odd mark to 140, 45 levels. So far in the last 1 or 2-3 weeks, the stock was consolidating. So I think it was stuck into a 10 point, 12 point band around that 145 mark plus minus range. But I think after yesterday's move, as well as the move which is trickled into the other commodities kind of a stock, I strongly believe that NMDC should be heading towards a huge breakout for itself. So again, a very good time as well as a price point to enter the stock at current levels.
Hemang, UBS says that food delivery market has actually grown at a very fast clip in the July to September period, clocking almost 10% growth. I mean, we all know the triggers, it's sports, festive season, all put together. Meanwhile, Zomato too has come to 106, 107. Growth is not an issue. Profit consciousness is already back at the management. Would you buy it at this level as well if I missed out much lower levels of 45, 50? Hemang?
I think if you look at the monthly usage data, you also are looking at the catalyst coming through from the World Cup. Also the fact that most of the legacy issues are behind, in terms of allocation, in terms of blanket performance. So I think this is one name which has really displayed a very good amount of conviction on the performance. And I think there's a long way to go. So though the stock has actually run up, let's say the downside was close to about 50. From there, we are looking at almost about 100% kind of uptick. But in terms of incremental growth and the fact that you don't have options to participate in this opportunity, I think Zomato can give you another 15-20% kind of an upside. But if you see a bad day in the market, let's say where the stock corrects 5%, 10%, that would be a much better entry.
Okay, fair enough. Let's find out what the pre-open rates are indicating at 9 a.m. and holding out in the green for the Nifty by about 130 points. For the Sensex, ditto is the case. Do remember the kind of handover as well that we witnessed from the overseas markets indicated that it could be a positive start. Let's find out those mid-cap strategies. Nooresh, what are you picking for the day?
So that would be a buy on CRISIL Limited with a stop loss at 3,900 and a target price of 4,500. The stock was in a sideways range for the last 4 months between 3,800 to 4,050. Yesterday I saw a breakout. Day before also saw good volume. So good price volume breakouts over the last two sessions. A new 52-week high and an all-time high. Should see some follow-up action going forward.
Okay, Kunal, what's your top mid-cap recommendation?
So I'll go with Paytm as a buy. The stock yesterday managed to break out of that 940 mark. It was flag pattern breakout for Paytm, closing above 940 levels. So would expect the stock to show a strong follow through over the next couple of days. 990 as a target for Paytm. Stop loss at 925.
Okay, that's the take coming in on some of the mid-cap ideas. But let's also tell you what else is happening outside the world of equity markets, and then we'll continue our discussion with Hemang. But as the war between Israel and Hamas enters into its fifth day, Israel has claimed that it has captured Gaza, even as fatalities have crossed 3,000 in count. In the latest, US President Joe Biden has pledged to provide massive military aid as a transport plane with advanced American ammunition landed in southern Israel. This is the first US plane carrying ammunition arriving in Israel so far in the last 5 days. And days after multiple earthquakes struck northwest Afghanistan, another powerful magnitude 6.3 earthquake has struck the country on Wednesday. There were no immediate reports on any loss of life or damage to the property due to the fresh tremors, but the Saturday's tremors of the same intensity killed more than 2,000 people, leveling thousands of homes in the country. And back home, in what can come as another pocket-pinching news for citizens, Mumbai's Rickshaw Men Union has petitioned the government that a fare hike of rupees 2 in the base fare of auto rickshaws be undertaken, citing increasing consumer price index along with higher maintenance and repair costs, etc. as well. The present base fare of the autos in the city is about 23 rupees, and the ask is to up it by another 3.
Meantime, Indian cinema's legendary superstar Amitabh Bachchan is celebrating his 81st birthday. Big B chose to have a brief interaction with his fans who gathered outside his residence on the special occasion. His birthday will be marked with a special KBC episode. In the world of sport, Indian athletes have created history by achieving a record medal tally. Lauding their performances, the Prime Minister met the Indian athletes and congratulated the women athletes, saying that they had given some amazing performances and accounted for half the medals that had actually been won by the total of 660-member contingent. And India will be taking on Afghanistan in their second game of the World Cup 2023 at the Arun Jaitley Stadium in New Delhi. India defeated Australia, remember, in the first match by 6 wickets. And now the men in blue will be looking forward to the winning momentum continuing against Afghanistan. India are likely to drop R. Ashwin and bring Sharul Thakur into the match.
All right, let's move on and get you some juicy gossip from the dealing rooms. Sharad is here with the stock in focus, which is being discussed by the dealers. Gravita India, what's brewing there?
Well, yes, just to give a background, this company is a small cap company and the company is a recycler of non-ferrous secondary metals. And the buzz in the street is that a scrap, which is actually kind of raw material, the higher they get, better it is for the company, and they expected to get a large order coming from scraps in the coming months. Now, important development also coming in is the capex announcement, which was there earlier. It's a 650 crore capex announcement over the next 3 years. That means the capacity is expected to go up by almost 2.4 times. Also, a high margin contribution coming in from the overseas business, and the management and the street both expect that at least the margins will be going at least at 10% on a sustainable basis going ahead. Now, looking at the market share, totally it's coming at almost 5 to 7% when it comes to recycling in the lead market. And importantly, this industry which we have been tracking, This actually is going to go up almost 35% on a CAGR basis as per the broking house reports for the lead segment, and this will be there over the next 3 years. So do watch out for this stock when it comes to order wins.
Right, we certainly will keep the Gravita India on our radar. Thanks so much for those details. Meantime, then, Hemang, want to get in your thoughts as well as to what the outlook is within the entire cement space, given that expectations are that it could be a pretty strong quarter this time around. Would you be looking at opportunities within the cement basket across the board?
Yeah, so apart from the fact that the numbers are going to be reasonably good, what you're seeing is that price hikes are being taken in certain pockets, eastern, southern in particular. Also, the fact that M&A is at play, and you might see a couple of more companies being acquired. So the mid cap and the small cap cement companies surely will be in action. So JK Lakshmi Cement, JK Cement, I think Ramco Cement, which is based out of Chennai, should be a good bet to look at. So I think all in all, in an election year, people really want to participate in the cement space because of the kind of announcement the government ends up making. You have both state elections as well as the general elections. So I think the view there is quite positive.
Okay, fair enough. That's the view coming in on the entire cement basket. And where within auto ancillaries, Hemang, are you looking at opportunity?
So auto ancillary also by and large is doing well, but the thing is that when you see a sustained monthly numbers that OEMs report, the action in the ancillary comes with certain amount of lag. So from a global perspective, Motherson and Bharat Forge are the two names that we've been liking. I think one should really stay focused on that because globally also when you look at the numbers, the auto companies are doing quite well. So I think it would be good to participate through some of these companies which have a global exposure.
Right. Himam, before I let you go, since you've been part of the Indian asset management market related platform community for such a long time, is it a good time for new investors to get into say an AMC stock or maybe an asset manager, wealth managing kind of stock? You think it is a structural play from here or valuations are not very comfortable for you?
I think it's a great opportunity, Ajay, for new investors or even for that matter, existing investors to participate in the capital market related plays. Now, that's a broad spectrum that covers the brokerage firms, some of the exchanges, the wealth management companies, the AMCs, and so on and so forth. So, if I have to give you one or two specific recos, my number one pick will be 361 Wealth, which used to be IIFL Wealth at one point. I think given the way they have shaped up the product offering, the AUM and the growth, I think that is looking quite compelling. And the other one I would go with is BSC because you're seeing that the cash market volume is picking up. Even their F&O, the new offering, you're seeing a good amount of traction coming through after a long, long time. You also have essential cash on the sideline. So I think these are the two names that I would be, having a high conviction.
Okay, Hemang, always great to have you on the show. Thanks as always for taking the time out and joining in today. Let's just revisit where the pre-open rates have settled in at. Marginally higher than where we left it off yesterday. And of course, there are a lot of stock-specific movers. Can still see a big jump up on MCX coming in. I also want to check in on, what a U Group Capital is up to. Their second quarterly updates and the AUM growth has been very strong. We're going to be chatting with the management as well shortly. There's some smaller ones as well, like a Lakshmi Organics. They're looking to raise about 259 odd crore rupees via QIP, so look out for this stock. Relige Enterprises, wherein newspapers are reporting this morning that the board has commissioned an independent valuation report. That's going to be another stock in focus. And then, of course, NCL India as well, wherein the Q2 cement production has come in higher by 9% and the dispatches as well have been higher by about 11% on a year-on-year basis or so. Cipla, of course, continues to be the other one in focus. Fresh reports this morning. There's a family rift which is clouding that $7 billion sale of Cipla, and it's the deal pricing which is under contention. But remember, we already reported this news to you day before that valuation is where it's all getting stuck. Just marginally soft for Cipla as we speak. In fact, and BOB is the other one that I definitely want to check in on after RBI has barred onboarding of new customers to its app. That's BOB World. That stock is down about almost 2% as we speak. But what's real estate doing? Is Godrej Properties, DLF, are all these names still holding out well in the green? Those names will just come up for you on your screen next, as would be the case with Coal India, NMDC, Adani Ports. Remember, that was also a big mover after that CLSA upgrade coming in and sort of soothing all the investor nerves around concerns around the Haifa port in Israel, which is geographically completely far removed from where the current turmoil between Israel and Hamas is currently on. Adani Ports, even in the pre-open rates, is showcasing some more rebound for itself. Kunal, let's get some trading ideas here. Any of the Adani names that you're going to bet on?
So I think Adani Enterprise is something which looks attractive at 2,500 levels. It's been consolidating quite some time. And I think it's showing signs of completion of mean reversion. I think if I'm not wrong, the stock yesterday or day before managed to come back towards its 50-day moving average and showed a marginal bounce from those levels, 2400, 2440 odd mark. Adani Ports is also hovering around the 800 levels. Now, I think it's a kind of a stock which should probably be bought into when you see the stock getting into an odd correction. And in the last 5-6 months, specifically post the Jan-Feb sharp correction for Adani Ports or Adani group of stocks, Adani Ports has shown that odd tendency of going into a correction every now and then. So that's, I think, a very good level to buy. Adani Wilmar on the short-term charts also, I think, has come back towards a strong bullish hammer pattern on the weekly time frame charts. Now, the stock has already gone through a more than a 10 to 15% correction, but just as a bounce, I would expect that post the formation of this weekly candlestick pattern, the stock can see a reasonable bounce from current levels where it's close around 350 odd mark.
All right, let's find out what those index calls are as well from our chartists. What is it that they're picking out, and what exactly is their strategy for the day? There you have it. It's a hold call coming in from all three of our chartists. It's a unanimous view coming in on the index, given that in yesterday's trade and today as well, we're seeing some follow through around the 19,700 mark. So that's the take coming in on the entire Nifty index. Ditto for the Nifty Bang. Our chartists are advocating that that's the strategy that you need to adopt. Hold on to your position.
All right. From the mid, also pull up the pre-open for mid-cap, small-cap. That part of the market also what was kind of taking off yesterday. Any picks which come to your mind, Nooresh, from the broader market?
So continue to like the whole rating space, which is where we are seeing good momentum. So CARE ratings broke out over the last two sessions. On dips is still an interesting buy. CRISIL looks a good defensive bet at current levels. The stock has consolidated really well. And then looking out for the small and mid cap banking names. So we've seen good momentum built up in a federal bank, which is still consolidating and holding higher. So Federal Bank is interesting. Bandhan Bank would be the other one, which is shaping up for a longer term trend. So mid cap, small cap banking, NBFCs, plus ratings. This is a good basket to look at.
Set then for the market open this morning. Lots on our plate. Fortunately, it's a strong global handover. Yesterday, we already had a scale up of 200 points from previous day's lows. So from those sub 19,500 mark, we made a dash all the way to that 19,700 print. And this morning, looking at the pre-open rates, or for that matter, the GIFT Nifty, it seems like we're going to make a dash to that 19,800 print on the Nifty futures for sure. Here come the first rates then this Wednesday morning, 19,766 on Nifty, scaling up higher by nearly 0.5% for the Sensex as we speak. Once again, it's a better start for the broader end of the market. The mid and the small caps are the ones which are taking a lead over what the benchmarks are doing. Let's first revisit the big buzzers from yesterday. Everything from Coal India to Adani Ports, Bharti, Hindalco, Adani Enterprises, Tata Motors, these were your top performers in trade yesterday, as was the case with realty names as well. The likes of a DLF, Godrej Properties really leading the charts when it came to the Nifty Realty Index. And today as well, you are seeing good amount of traction for the realty pack as we speak right now. What's Escorts up to, what's City Union Bank up to, and NMDC, those stocks also will just come up for you on your screens. Now let's address the newsmakers. MCX, and they're going to go live on the new platform come October 16th. So let's see what that stock is up to. CUB, of course, is seeing a big move after that mega move in trade yesterday, and MCX as well. There's really no stopping this one. Another 2% higher for MCX as we speak right now. There's Ugro Capital, a good amount of AUM addition in the quarterly update, a 73% uptick. Net loan origination has risen about 34%. Ugro gaps up 5% as we speak right now. NCL as well. The production numbers for cement and the dispatches as well, both have posted a good show. So both those stocks are looking quite okay in trade as we speak right now. There's Religare, which is in focus. There's Lakshmi Organics, wherein there is a 259 odd crore rupee QIP. There's of course BOB. Let's see what that one is doing, considering the RBI has now barred the onboarding of new customers onto their app BOB World. So that's another stock which is in focus. And Cipla, we already told you about this, but now newspapers are catching on to that story that the valuation is where it's all getting stuck when it comes to, the deal pricing for Cipla promoter stake sale. There's of course Z as well, wherein IDBI trusteeship has filed an appeal in the NCLAT against the NCLT nod for Z Sony merger. So that, news flow really continues on this one. But Z is unabated. All the damage, I think, is already in the price. 261 is where that stock is currently in trade. Ajay, anything in specific that you're spotting?
I'm looking at a follow-up buying which is happening in a lot of Mumbai-based real estate developers like Centec and others. I'm also looking at some of the, all these Varun Beverages of the world, Zomatos of the world. So that entire QSR / eating out / so that kind of merry-making stocks are also doing very well. So the early rates actually appear that yesterday's gains are maintained. We need to see first 15-20 minutes, very important, that do we give up some of the gains which were made yesterday or we build upon them. That is something to watch out for. And yesterday pharma was weak actually, particularly weak. Today pharma has come back. Stocks like Dr. Reddy's are doing very well, and so is Lupin. Both are trading by 1 or 2% higher. So overall it looks like a pretty decent opening this morning as well.
It does. Kunal, how's it looking to you?
It's a very good opening for the indices. The Nifty back again about that or close